Welcome back to Investing Talk Podcast. Today we are focusing on one of the absolute giants in tech, Taiwan's Semiconductor DTR industrial. Let's call it TSM for this conversation. Makes it easier. And the big question, really, based on all the recent analysis, especially looking ahead to Q4 2025, simply this: is now a good time to buy TSM stock? We've pulled together, a whole stack of recent reports, earnings, analyst takes, geopolitical stuff to give you a really solid, quick picture. And hey, if there's a specific company you want us to look into next time, please drop a comment below. Seriously, let us know. Oh, and don't forget to subscribe and hit that like button. It genuinely helps us keep doing this kind of analysis for you.
That's right. And TSM, it's right at the heart of global semiconductor innovation. So when we talk about it, we're hitting earnings, yes, but also product launches, huge CapEx, and, the unavoidable geopolitical headlines. We really need to unpack all the evidence the sources provide, see if that current price makes sense.
Okay, let's start there then. Let's unpack the last few months. What actually happened, say, July through September 2025 that kind of shaped where TSM stands right now?
Well, the last 3 months were fundamentally pretty bullish. It really kicked off with the Q2 earnings report back in July. TSM didn't just meet expectations. They robustly beat their revenue guidance.
Okay.
And that was largely driven by just huge demand for their top-tier nodes, N3 and N2.
The really advanced stuff.
Exactly. And seeing that demand confirmed really prompted analysts pretty much across the board to revise their guidance upward.
Right, and that feeds directly into the whole AI narrative, doesn't it?
Yeah.
That secular trend we keep talking about.
Absolutely. The company made a point of highlighting expanded partnerships with major AI players, custom chips,
Yeah.
It just reflects this massive, maybe even accelerated adoption of generative AI hardware, especially at the hyperscale level.
No.
TSM is just indispensable there.
They need that silicon.
They really do. Then you move into August, and you saw institutional investors kind of validating this, increasing their stakes. That signals some long-term confidence.
Okay, but August was also when they tried to tackle those supply chain worries, right? The geographic concentration thing.
Yes, good point. That's key context. Their new Arizona fab hit a pretty significant construction milestone then. It was a tangible sign of progress on diversification, aimed squarely at easing concerns for their U.S. customers.
Makes sense?
And then, sort of a surprising bit surfaced in September. Rumors started swirling about faster adoption of TSM tech by big auto companies.
Auto. Interesting, for EVs and self-driving.
Exactly. It seems the high-performance needs of autonomous systems are pushing them towards TSM's leading-edge nodes, too. So another growth area potentially opening up.
Okay, but we can't just paint a rosy picture. Despite all that good news on earnings and tech, July was bumpy, wasn't it? Geopolitics flared up.
Yeah, tensions between Taiwan and mainland China definitely spiked, and you saw that immediately reflected in the stock, heightened focus, volatility.
It really hammers home that this stock moves on, well, macro political news just as much as it does on fantastic earnings reports. It's kind of unique that way.
It is, and what's fascinating, I think, is how the market seems to have learned to process this. It recognizes the geopolitical risk is, well, persistent, but it also prices in that technological dominance almost instantly. So it treats TSM like this maybe deeply discounted asset that just snaps back when tensions ease off, even for a moment.
That's a good way to put it.
Yeah.
Okay, so that sets up the next big question. Let's push the news cycle aside for a sec. What are the fundamentals, the bedrock financials? Does the balance sheet justify the hype? And what does it say about their competitive moat?
Right. The sources confirm TSM's financials are like a fortress, basically. TTM revenue we're looking at is $116.3 billion. TTM net income, $49.4 billion. But the number that really jumps out, the one to focus on, is a net margin. It's sector leading, around 42.5%.
Wow, hold on. 42.5% net margin. In a business that needs insane capital spending. Competitors are pouring tens of billions into CapEx, just trying to catch up. What does maintaining that kind of margin actually mean for their competitive advantage, their moat?
It means that profitability is the moat, essentially, or at least it funds it directly. That massive margin lets TSM self-fund the R&D and the fab development for the next generation, pushing from 3 nanometers down to 2 nanometers and beyond.
So they use today's profits to lock in tomorrow's lead.
Precisely. It creates this almost insurmountable barrier. They're widening the gap against competitors who are, frankly, struggling with much lower margins. It's exponential.
Okay, the quality is clearly there, but how does that translate into valuation? Are we paying a huge premium for this unmatched quality?
Surprisingly, not really, at least not compared to some key peers. The forward PE ratio mentioned in the sources is 21.50, and it's specifically noted as being below companies like NVIDIA and AMD.
Huh. So why the discount?
That's the million-dollar question, isn't it? Why is the market discounting arguably the most critical chip supplier relative to its customers? That discount, it's almost certainly the price tag the market puts on that geopolitical risk we talked about.
Yeah, that makes sense. But let's push back a bit on the consensus here. The sources say all analyst ratings are strong buy or buy. Okay. Yet the average 12-month price target is $286.67. From a recent close of $273.36, that's only, what, like 4.9% upside? Doesn't that feel a bit conservative? Does it mean the market's already priced everything in, or are analysts just baking in that same geopolitical discount?
I think it's likely a mix of both. The upside looks modest, partly because the stock has had a massive run already this year, up 42% year over year, remember. It's not cheap in absolute terms. But the consensus stays by, because that technological moat is just so strong, it's absolute. TSM controls over 55% of the global foundry market. Their leadership in 3nm, moving to 2nm, it cements this wide economic moat. Giants like Apple, NVIDIA, AMD, they simply need TSM. There's nowhere else to go for that kind of scale, yield, and cutting-edge tech.
Irreplaceable, basically.
Pretty much, yeah. For the highest-end stuff, absolutely.
Okay, so we've got the solid foundation, the strong recent trends. What about looking forward? What are the specific, maybe even just rumored catalysts that could actually move the stock in the next quarter or two, maybe push it past those conservative targets?
All right, the known catalysts are mostly clustered in Q4 2025. The big one, obviously, is the Q3 earnings report. That's coming up on October 15th. Investors will be laser-focused on updates for the advanced node ramp-ups, N3, N2, and especially any revised guidance on AI demand. That's been the real engine this year.
Makes sense. And then there are the more mechanical market things, index changes, fund buying.
Exactly. You've got ETF index rebalancing events expected around November 30th. And then institutional buy disclosures around December 10th. Given TSM's size and weighting, those rebalancing events alone can trigger pretty significant liquidity flows, shifting demand.
Okay.
Plus, we should get some commentary around Halloween, October 31st, about holiday season demand. That gives us a pulse check on short-term consumer electronic sales, which is still a big chunk of their business outside AI.
Right. Good point.
Okay.
Now, for the fun part, the speculation, the rumors.
Right.
What's the chatter out there that could create some volatility, maybe some opportunity?
Well, one persistent rumor is geographic expansion, possibly into Europe. You hear talk about potential fab discussions, likely spurred by EU incentive programs trying to attract chip manufacturing.
Diversification again.
Yep. But maybe the most significant speculative catalyst is tied directly to their core tech advantage. There's industry chatter suggesting TSM might pull forward the N2 process node into mass production earlier than planned.
N2 earlier. Why? Just because they can, or is there pressure?
The rumor is because of overwhelming customer pre-orders. Demand is just that strong for the next generation.
Okay, for someone listening who doesn't track nanometers daily, what does accelerating N2 actually mean? Is it just a bit faster, or is this like a real step change that widens the gap?
Oh, it's a major leap. Moving from 3nm to 2nm isn't just shrinking things. It involves fundamental changes in transistor architecture, things like gate-all-around or GAA technology. It's a critical shift that unlocks significant power and performance gains. Think next-gen iPhones, next-gen AI chips. If TSM gets there faster,
It means the competition is even further behind.
Exactly. It cements their indispensable status for probably another 3 years, maybe more. It's a big deal. And then finally, sort of related, there are whispers about an imminent launch of next-gen advanced packaging tech. That's becoming super important for connecting different chiplets efficiently, especially for AI hardware.
Okay, so lots potentially happening. If the fundamentals look good, the moat is strong, catalysts are lining up, what's the chart telling us? Technically, where does the stock sit, and are there any warning signs flashing?
Yeah, the technical picture largely confirms the bullish story. The stock's trading comfortably above its 50-day moving average, which sits around $246.14. And it's way above the 200-day average at $207.14. So that confirms a very solid long-term uptrend is in place.
And short-term momentum, is it looking stretched?
It's strong, definitely. The stock is hovering near its all-time high, around $273.36. Remember, September, it's up 42% year over year. The RSI, the Relative Strength Index over 14 days, is at 67.2. Now, that's getting up there. It's warm, but it's not technically overbought territory, which is usually above 70.
So still potentially some room to run short term.
Potentially, yeah. Key support level everyone's watching is probably that 50-day moving average around $246. Resistance forecast put it in the 286 to 291.1 range, which, interestingly, lines up pretty well with those analyst targets we mentioned.
Okay, makes sense. Now let's inject some realism, some skepticism. An opportunity this big always comes with big risks. What are the main vulnerabilities that you, the listener, should really be focused on?
There are two big ones, and they're kind of inseparable from TSM's story. First, and most obvious, is geopolitical risk. That concentration of manufacturing in Taiwan.
Yeah.
It's their Achilles heel. Yes, the Arizona fab is happening, but the sheer scale of production in Taiwan just can't be replicated quickly elsewhere.
So any flare-up?
Any escalation in cross-rate tensions immediately brings severe, unpredictable volatility to the stock. It's the elephant in the room.
Okay. And the second major risk?
It actually stems from their success. Client concentration. TSM is vital, yes, but it relies very heavily on a handful of massive clients. You know the names Apple, NVIDIA, AMD. So if any one of those giants hits a rough patch, maybe a product delay, a cyclical slowdown in their specific market like hyperscale spending, the impact on TSM gets amplified because of that dependence. Management knows this, of course. They're trying to mitigate it with the diversification efforts, Arizona, maybe Europe eventually, but you have to be realistic. Right now, those efforts are just a fraction of their Taiwan capacity.
Got it. Okay, so bringing this all together then.
Yeah.
The overall thesis, based on the sources we look at, it leans heavily bullish, right? Like a 9 out of 10.
Yeah, that's the summary rating, a strong 9-10 bullish. The rationale is pretty clear. You've got unmatched process leadership, that fortress balance sheet we discussed, and these big strategic wins in secular growth areas like AI. So the thinking is it looks attractive both for maybe trading the upcoming Q4 catalysts, but also for just long-term ownership holding through the cycles.
Okay, so we've covered the financial strength, that incredible tech moat fueled by those margins,
Yeah.
the potential triggers coming up, and the big risks, geography and client reliance.
So maybe a final thought for you to chew on. We know the big risks are geography and client concentration. How do you weigh the rumor about accelerating N2 production against the strategic moves to build fabs in the US and potentially Europe? Which of those factors actually offers more downside protection in the long run? Is it staying technologically light years ahead, or is it spreading the manufacturing footprint? Something to consider.
Definitely something to think about. Great analysis. Thanks for breaking that all down.
My pleasure. And just the usual reminder for everyone listening, this analysis is purely for research and informational purposes. It is definitely not investment advice. Do your own homework.